Hey, welcome back to the channel. Today we're going to be talking about how you can start investing with only $100. If you've been wanting to dip your toe into investing but don't know where to start, this is the video for you. It can be pretty overwhelming when you're first getting started to know, where do you start with investing, but the fact is the sooner you start investing, the better off you'll be. Time can be your best friend or your worst enemy when it comes to investing, and compound interest is a beautiful thing, but it really takes time for your money to grow. So today I'm going to walk you through how to get started investing with only $100. And I would encourage you, after this video is over, to go take your $100, open up a brokerage account, and start investing. The first thing is, what do I invest in? And the answer to that is index funds. You're going to hear this advice from a lot of people from everywhere. And the reason being, it's there's a pretty low barrier to entry. So if you want to get involved in real estate, it's going to take you a little bit of time to save up some money for a down payment on a house, and that's just going to take time. Whereas with index funds, all you need is $100, sometimes less, and then you can just build from there. So it's a really great way to get started investing and get your money working for you as soon as possible. Index funds are passively managed mutual funds that try to replicate the return of an index. This could be any index. One of the most common types of index funds are ones that track the S&P 500 index, hence index fund. A passively managed fund simply means that there's nobody actively managing it on the other side, picking stocks. So an actively managed fund or actively managed mutual fund would be where there is a fund manager on the other side and he's going through doing research and actively picking stocks for that portfolio. One of the things that makes index funds so great is that historically they have outperformed actively managed funds over the long run. Now, quick caveat here, past performance does not necessarily indicate future performance, so just keep that in mind. But historically, they have outperformed active funds. Another advantage to index funds or passively managed funds is that they typically have lower fees, because with active funds, you have a manager who needs to get paid for his time to select what goes into the portfolio. With the passively managed funds, you don't have that, so you're going to pay less in fees, which also makes it a great option. And fees cut into your return. So if you're paying a 1% fee, which is very high, but if you're paying a 1% fee and your mutual fund returns 8%, well, really, it's not 8% since you're paying that 1% fee, so it would be 7%. So lower fees are definitely great. And the last thing I want to mention about why I think index funds are the best way for you to start investing is the lower risk. Now, this does not mean that they won't fluctuate. You will definitely have fluctuations in the market because, again, you're buying essentially a slice of the market or a slice of an index. So let's say, for example, you were an individual stock investor and you bought into Amazon. And then Amazon goes out of business. Highly unlikely, but this is just a theoretical example. Amazon goes out of business. Well, now, everything that you've put into Amazon, you lost it all. You've lost everything that you put into Amazon. Whereas if you put all your money into, say, an S&P 500 index fund, which Amazon is a part of the S&P 500, and Amazon goes out of business, the market overall might dip due to that news because Amazon's such a big company, but Amazon will be replaced by another company. So you're not going to lose all that money. So this definitely reduces the amount of risk that you take on by investing. Now, again, prices fluctuate, the market fluctuates, so it's not risk-free, but if we're looking at long-term investing, don't worry about those fluctuations. All right, so the next logical question is, index funds sound great, but where do I invest? How do I invest in an index fund? So this next section is going to be about that. Most major brokerages are going to offer similar features. So if you go with a Schwab, Fidelity, Vanguard, you really can't go wrong. I would encourage you to just, before you pick one, do some research to see if one has features that you like more so than others. But you really can't go wrong with these. And Vanguard is probably one of the most popular for their index funds. But I personally use Schwab, and I love it. I really like their platform. Some features to consider are any kind of research tools, smart portfolio tools, and of course the most important is customer service. Another brokerage option are some of the app-based platforms, so Robinhood and M1 Finance. It's more well known that you can buy individual stocks, but they do also offer mutual funds and index funds. M1 Finance is phenomenal. I would recommend you look into that. I personally used M1 Finance. I have not tried Robinhood, but M1 Finance has a really nice platform that makes it really easy. You can use their pie slices. It's just an automatic allocation that you can set up. It's very cool. So now that you know where to go to invest, let's talk about specifically what fund you should invest in. Now, a quick disclaimer before we get into this. I did go to school for finance, but I am not a financial advisor or anything like that. I'm just a guy in my spare bedroom talking about personal finance. I love it, but I'm not a financial advisor. So just take that into consideration. Take it with a grain of salt and do some extra research before you put your money anywhere. So my portfolio consists primarily of index funds offered by Schwab. I do have some individual stock holdings and a couple actively managed mutual funds, but the majority of my money is in Schwab index funds. The majority of my portfolio is SWPPX. So this is Schwab's S&P 500 index fund. And then the other one is SWSSX, which is Schwab's small cap fund. And the majority of those holdings are from the Russell 2000 index. So SWPPX is one great option. This is where I put my money. This is where I'm going to continue to put my money. I've been very happy with it. If you're thinking somewhere like Fidelity, they have their FNILX. That's the ticker symbol. That's Fidelity's Zero Large Cap Index. And that's actually a 0% expense ratio. So you pay nothing to have holdings in this fund, which is excellent. That may be one of the best deals around. Now you know what to invest in, you know where to invest it, or at least the options, and then you've got some options for what kind of funds or which funds to invest in. So the next question would be, how do I do it? Okay, I've got this open. I know I want the SWPPX. How do I buy it? So all you've got to do, you open your account. Let's say it's Schwab. So you open your Schwab account. You deposit money. Once you deposit money, all you've got to do is search SWPPX, click buy, and then enter the amount that you want, place order, and that's it. You've just made your first investment. It's that easy. That tripped me up when I first got started. I knew what I wanted to invest in. I knew where to invest it, but I had no idea what do I do? All you've got to do is search that ticker, click buy, enter the amount, click place order. It's that easy, and now you're an investor. Congratulations. That's awesome. There's a lot of different avenues you can take when investing, and this is by no means the only option out there, but I do think that this is the best and easiest way to just get started. As you start doing more investing, you'll probably want to start diversifying more and investing in different asset classes other than just index funds. It wouldn't hurt to invest in actively managed mutual funds. Just do your research. Individual stock picking, which also requires a significant amount of research. There's REITs, which are real estate investment trusts. And then there are also things, such as bonds. These are all great options, but I definitely recommend you start with index funds and then start dipping your toe into these other asset classes. The last thing I want to mention is that I highly recommend you set up an automatic transfer from your banking account to your brokerage. That way you always make sure to pay yourself first. This makes consistent investing over time so much easier. Realistically, you probably won't even realize that the money is gone. And it really helps eliminate the any kind of excuses. Do what you can. If it's $50 a month, if it's $100 a month, the more the better. Of course, if you can do $500 a month, do $500 a month. Whatever amount that you could do, I would highly recommend that you do it. That's all I've got for this video. Please be sure to like, share, subscribe if you like this content. And if you don't, let me know what you don't like about it. I'll see if I can do better next time. And definitely let me know in the comments down below whether or not you're investing in index funds. And if you are, which index funds are you investing in? And have you been happy with their performance? Until next time, thanks. Bye.